All right, good evening, guys. Ken at Tortoise Capital. Review of the daily trading plan for September 22nd, 2021. The Tharp Institute was kind enough to have my little essay on standard work in their little weekly email blast. My thoughts on the importance of doing routine things routinely. In memory of Colonel Bill Steiger, a great American, great infantryman, great boss, a real hero. Who left us too soon? All right, so we'll start with the market health check in the usual way. So I'm noticing that we've got a 10-day low. Now this one closed higher, so that in retrospect, when this closes and it has a higher low than the previous bar, and that was the swing low, that makes this bar 1, that makes this bar 2, and now this bar today opened inside of that range, and then without making a new low, managed to, as it was moving up the stack, take out the high of bar 2, which makes this the automatic entry level for a 1, 2, 3 entry. That's what we mean by that. Now you notice that this also was like at Z minus 4, and there's Z3, and then there's Z2, and so we could have also legitimately entered here yesterday as that would be a P7 in the RLCO framework, where you have this exaggerated sell-off beyond Z3, and then when it crosses up at Z2, you make the entry here with the stop here at Z3, and you're using essentially a standard deviation box as your risk. And then today it got almost to Z minus 1, and then the idea would be that you could just trail that stop. That's the P7 in the RLCO framework, generation 1. We have P1 to P7 as the recognized patterns in that RLCO generation 1, and that pattern there is one that we would use when you have these extraordinary divergences from the Z3 to Z3 envelope. So normally we think of this from Z3 to Z3 as the normal range, and then when you get price action outside of that, you have a genuinely abnormal condition. And so when we have two kinds of conditions. One of them is a normal condition, and for that you want to have standard work. Standard work. What do you do when conditions are normal, and it's sort of a set of procedures and approaches and patterns, and then you want to be able to draw a distinction between normal and abnormal. And what you want to have is standard work for abnormal conditions. Now the rule sets will be different. The way you frame the trades, the priorities that you use, the habits of mind, how willing you are to stay in winning trades, how quickly you cut losing trades, and so forth, how much risk you want to have in the overall portfolio. When you're in abnormal conditions, you have a set of rules that are optimized for those abnormal conditions. It's like flipping a switch, and you adopt a different mindset. But what you want that to be is standard work. You want a set of standard work for abnormal conditions, just like you want standard work for normal conditions. If you were rock climbing and you had some kind of wall that you were practicing on, you didn't need to be roped in because of the height that you might fall or the steepness or whatever. You might just free climb under normal conditions because the risk to you is low. But if you were making a very tricky ascent and it was dangerous, you might have the same standard work, but you would use extra rules like maybe being roped in or have a safety net or other safety gear. But you would want to climb under abnormal conditions in a standard way. So for us, having indicators that allow us to draw that clear distinction between normal and abnormal is really crucial, so we know which set of standard work rules to apply to the workspace, so that we can then study those results in a separate batch, so we can take a look at the histogram of results under normal conditions and a histogram of results under abnormal conditions. And then if you have standard work for each one of those, you can use the data to update the rule set without mixing the streams, if we can say it that way. And that was the essence of today's essay. It's on the Patreon and also in the on the THARP email. And I think it's an important essay for you to consider as you're developing your overall trading strategy, is to account for the difference between normal and abnormal. And then you want to know with absolute clarity when conditions are normal and when they're abnormal. And then if you have something like the Z3 line, well, you'll notice that when we use the Z-score ladder like that, the Bollinger Band, so there's the mean and there's +1 and -1, that's the true normal of all, is inside the river, because you're within one standard deviation of the mean. And the Z2 line, the floodplain, is things are starting to get a little dicey. Like you're still under normal conditions, but that's like the extreme. It's now moving towards abnormal. When it gets beyond the Z3, really only 0.5% of the time does price ever get outside of that, and that's genuinely abnormal. So we use this floodplain and beyond the floodplain as warning signs that genuinely abnormal conditions are happening. So now when it's outside the Z3, there is no doubt that we are in abnormal conditions. And so under abnormal conditions, I might be willing just to play a retracement that it went beyond Z3, it comes back through Z-2, and I can enter with a wide stop, and my target would be back here at the reversion to the mean, and that gives me an automatic 2-to-1, because it's one standard deviation of risk and then 2 standard deviations of reward. And so the Z-score ladder allows you to frame that trade with standard work rules under abnormal conditions. That's the essence of the P7 pattern. So what are some other things that we notice here? The Hull 3 period has moved back to upward motion. We had the 1, 2, 3 entry possibility here. The RL10 is still in the winter, but is starting to flatten out. So if we had one more good day, it wouldn't surprise us to see that RL10 move this way, and then this would create a new support level like the RL10 belly, and then that would become the demarcation line for future moves. Like that would be where we'd invoke the CD, the collapsing dragon would trigger. So if this price moved up a certain distance, maybe it rejects at the edge of the river and then comes back down. If that price comes down through 436, then that's an automatic short for us because of the collapsing dragon pattern. It gives us this harsh down, rebound up, and then fail. That belly of the RL10 is what creates the collapsing dragon pattern. So that price for future notice is at 436. That's an auto short for me. Don't even think twice. We're within stretching distance here of the spine of the dragon, the 2.5% sell-off. That's kind of a return to normal. We notice the Bollinger Band mean and the upper skin of the dragon is at 446. We see that the slope of the RL30 is still decisively downward. The PSAR, which flipped 9 days ago, has rolled and is starting to accelerate to the downside. So tomorrow, that dot's going to be like right about here. Excuse me, at about 446. Notice how important that PSAR flip was as a early warning when the PSAR flipped from here. So nice little upward move. And then the PSAR flipped to here. Notice how important that warning signal was, and then how important the RLXD was, and then the crossing of the Bollinger Band mean, and then the departure from the river. So all of those things are like road signs on dangerous roads in the mountains, warning you about upcoming difficulties, which are also potentials for short side trading. But now the Hall 3 period has moved, and the 1, 2, 3, and now it feels, and then the slowing of the RL10 and the potential reversal, that's all giving us hints and allegations that this is potential change of direction. And this little price action, if that follows through, that's going to make all of those channeling and overreaction signals once again pay off. And there was a really strong payoff just as an intraday trade inside here. All right, so that's that. Let's take a look at the sectors. Let me know in chat if you found that to be helpful. Okay, first things first. So we've got the S&P was up 1% today. The Qs were up 0.93. The Dow was up 1%. Treasuries were up 0.6. Emerging markets were better at 1.25. And then the Russell, the aggressive U.S. small caps there, were the best performer at 1.55. So let's see what led the way today. What was better than the market for our sectors? Well, materials up little over 1%. Blended commodities 1.14. The FANGs 1.3. It's the second day in a row they've done better. Clean energy 1.35. Consumer discretionary, technology, lumber, Mexico, Brazil 1.5. Finance 1 2/3. The other lumber 1.76. Oil, moonshots, lithium, commercial real estate, energy, blockchain, oil exploration, marijuana. Now we're up at 3.7. Ethereum and the Bitcoins, the blended large cap crypto, and then now for individual performers, Robinhood 11%, Devon Energy and Alcoa up strong in the metals and the energy mid-cap 6.8 and 5, Squarespace 3.9, Tesla 1.7 and closed above 750, so that's a very strong performance that we were prepared for today based on yesterday's report. Apple 1.7, pretty strong. Coinbase 1.4. Virgin Galactic, Microsoft 1.3, John Deere, TX, the steel company, and PayPal. So a pretty good eclectic mix of broad-based sectors and companies that outperformed. The underperformers were few in the sectors. There was Alcoa, 0.9, ARC Innovation 0.8, Consumer Staples 0.3, Biotech 0.28, ARC Genomics minus 0.59, Wheaton Precious down 1%, and then the VIX off 6%. So that feels like, more evidence of potential to the upside. Then the individual companies, U.S. Steel was flat, Cliff 0.8, PayPal 1.06. So again, a pretty good mix of follow through, and that feels like people buying on dips, and all that index buying from yesterday and then from this morning feels pretty strong. And the overreaction signals once again dominating. We had just one chart posted. Again, if you want feedback, post the charts in the chat room. That's how that works. UDow, so this is a triple leveraged Dow Jones Industrials. So we've got, let's see what we got here. Excuse me. So gap up, held here, and when that holds above yesterday's close, that's a really strong signal. And I'm looking for where the long signal was. I don't see it in there. But he does a nice job on this reversal. So I'm not sure where the minus 0.8 was. That would have to have been somewhere around here, probably, and he probably took that exit. I'm sorry. I see what it was. He got short here, and then immediately reversed, and gets this move at 1.4 to pay off the minus 0.08. This was a reasonable re-entry, and I like the exit here, and I love the re-entry. There just wasn't much to make on that, and so another strong re-entry. So notice that his gains, 1.4, 1.0, are bigger than the minus 0.8 and minus 0.5. So he's cutting the losers, and he's letting the winners run reasonably. And in this case, he got what was there. He didn't let that go negative. That's good. Here is his exit right in the elbow of the dragon. He waits to here to get short. Excuse me. I'm not offended by that. That's still reasonable. And he gets the gain. This is a 1, 2, 3 exit, so he gets paid here on the short side at 0.5. That's excellent. And then the re-entry on the reversal was maybe a bar late, but still that's pretty good. It would be you'd have to be very alert to get that exit. He gets the second leg. I think this should have happened here instead of here. And then this should be where the short is rather than waiting for here. But this is still fine. He waits for it to cross the Bollinger Band mean. He gets short. And here was an opportunity for a second position for two reasons. Here's the belly of the RL10. So when that breaks, you can get that second position. This is also the VWAP. So there were two reasons to get short right here. And then that would have made this 1.2 would have grown to be about a 2.0. This is a great exit. And I like the COTA 2 re-entry here, where he has a low and then a higher low, and then he gets it as it crosses the dragon the second time. That's just beautiful work. And then he nails for 1.0. So this was really well done, Luke. Yeah, that's just as nice as it gets. That's good standard work. Can't praise that too highly. Excuse me. All right, so there's a couple things I want to cover just as a sample trade. So this was in Robinhood, but the position I want to alert you to, and this is an abnormal condition right here. Now notice this entire region previously, this whole space is normal conditions because it's well within the Z3 envelope, right? And it's clustered pretty tightly around the VWAP. But when you get this move that goes outside of the Z3, that suddenly now makes this a potential intraday 1, 2, 3. So the 1, 2, 3 entry, if you were going to make that play, is available right here. Right there, right? So let's zoom in on that rascal. So now you have this extreme move all the way through the dragon, out of the river, across the floodplain, outside the Z3 for a couple bars, and it makes that swing low. Then you have bar 2. When that closes and made a higher low, that makes this bar 2. And then when it takes out bar 3, takes out the high of bar 2, that's your entry, and you would have a reasonable stop. You could either make that play right there at the bottom of the dragon. I wouldn't be offended by that. Or you might just take the Z3 line or the swing low. Either one of those, as long as you get that entry in. And then your target, your reasonable target on this one, is a return to first the Bollinger Band mean, the PSAR flip, the far side of the river, or the VWAP. Any one of those four, a move to any one of those four lanes would be the least surprising move of all. You're not allowed to be surprised if that move happens. Okay, so there it gets to the Bollinger Band mean. And then you notice inside that blue circle, the winter turns to spring, and so an entry in this region, we'll call that the blue, in the elbow of the dragon right there, we'd call that a SSC, and your reasonable risk would be the PSAR flip. Right. So that's why I kind of like a stop down here at the belly of the RL10. That's a statistically significant price, right? So that's why I don't mind a 1, 2. If I'm using a 1, 2, 3 entry, then the belly of the RL10 is a reasonable price frame. And then when you get the entry, when you get the entry here at the blue dot, then that stop down here at the PSAR flip is also the reasonable move. And the difference between those two is, the difference between those two entries, as you can see, is that little piece. So now we've got the move has made it to the Bollinger Band mean, and the RL10 has turned to spring. And now this upside move of the VWAP and the edge of the river are the next two things of interest, the Z2, and now we would say the RL270 up there. And I have in mind also the previous Z3 pinch, but you notice that really is kind of already included in the VWAP and the Z2, so you don't have to have an extra target in there. But all those things are still well within reason. And if I'm in that trade, then I've got my stop, which, let's say if we had used this one, by this time I would just put that right here and just be done with it. And now no matter which one of those entries I've made, I've locked in a gain at no lose plus dinner for 2. And now it's just a science project, right? By this point, I probably raised my stop to here. I wouldn't be offended if you had taken this 1, 2, 3 exit right there. Nothing wrong with that. Would you be happy with that trade? Yes, you would. Because you would have made, from the first entry, you would have made that move against this risk, right? And that feels like 1, 2.5 R. Second leg up. Now, this is where you might have thought about an additional entry here as it crosses the VWAP. And if you do that, and then you get like those three little bars, I wouldn't be offended if you then incremented your stop up to there. And now you've got your second position locked in the money. And off you go. Nothing wrong with that. And then that's where I would be getting out when it crosses back underneath the VWAP. So that's how you trade the extreme case. That was standard work for an abnormal condition. Standard work, abnormal condition, right? Abnormal because price had been outside that thick red line, that Z3 boundary, plus or minus 3 standard deviations. I define as the extreme limit of normal behavior. And all this thing has done, really, is come right back into the previous range of normal, and it's sitting right on the VWAP. So it turns out that the reversion to the VWAP is the least surprising move of all. Happens all the time when you get those short-term anomalies. And there was more available. Here is a COTA 2 re-entry when it recrosses the dragon. And now the river is sloping up. And you see that the RL270 is strongly up. And the river, it's now leaving behind all of this price action below the VWAP. So now you can think of underneath the VWAP as the support level, the edge of support. Now that feels like I'm not going to lose money on that trade. If I get this re-entry here, right now I just put my stop in here, and I'm not going to lose money on the trade. I don't like losing money. So that whole sequence, this was that, oops, wrong one. This was that thick yellow region of normal price behavior inside here. This was that Z3 excursion, the abnormal move, and then the move back to the VWAP is that move, right? And this was our little COTA 2. Oops. That's our little COTA 2 move, right? That next one that we framed. God dang it. Come on. This is where that COTA 2 re-entry occurred. There's a Z3 breakout. And now price is above the RL270 and the river is steeply up. Sweet. Nothing wrong with that. So by this time, you've got a strong move in hand, and you're thinking about how to preserve that. So in that kind of situation, I just flat out I just draw a line there. I just don't want to let it go below that. Okay, sweet. Oh, look what we have now. Now we have another extreme move, this time left the Z3 and came all the way back once again outside the Z3, came all the way back to the VWAP. And there is your immediate recovery reaction move. All the way back to the previous limits. Tradable. There's a COTA 2 in there. Now we have kind of another exaggerated move. It pushed the Z3 boundaries up here, came all the way down to Z-1, came all the way down to Z3 once again. Extreme condition. Sharp recovery and reversal. Came all the way back down almost to Z3. Another sharp reversal happening. So, yeah, you can make bank on that upwardly sloping price action, and notice it's all above the VWAP, and those sell-offs immediately sharply reverse to the upside. So you got to be prepared for that kind of buy-on-dip opportunity intraday, and you're getting small risks and major league payoffs. And another big old move. Pulls all the way back to the Bollinger Band mean, gives you a COTA 2 re-entry, and there's a 2.5% move just inside that, in that little piece, just when you thought it was over. So here's a move that came all the way from 43.5, ended up moving all the way to 47. So find the movers. Find them. So the initial harsh sell-off to 43, and then a 10% move up to 47. Find the movers. Robinhood. That's why it's on our list. Financial services disruptor. Young people believe in it. Not shy about adding their money to that. Let me know if you found that helpful. All right. Okay, to the daily report, to the boards, dashboard. Alert. Bullish volatile conditions. Perfect for intraday trading. Only the long term is overbought. Everything else kind of has come back into the middle. The volatility is right at that crucial level. This sets up a nice swing trade in either direction, because if this collapses, it could really be bad, right? The risk Z is warning us about the abnormal conditions. The overreactions and the channeling are all in the money. Still plenty of auto framers to work with. You had American Express and Boeing in the breakouts on the NDX short term. A reasonable number of channeling and overreactions still available. 1.5DD available in Walgreens, and it's at 2.4 to 1. So if you like the 5DD, Walgreens is a trade frame for you to study. In the ETF 30 tactical, handful of dojis, a half a dozen auto framers. Treasuries had a breakout to the 10-day and 1-month highs today. Otherwise, nice recovery in energy and oil exploration. And the U Dow, the triple Dow, was up strong. Oops. The auto framer speaks for itself. At most, I am day trading one day at a time and maximizing the intraday opportunities because of these abnormal volatile conditions. So I'm using these candidates as high payoff targets intraday, like Robinhood was today. That's where I'm looking at things like Cisco and CAT and 3M and Dow and XLB and the steels, the metals. Swing trading one day at a time. Pfizer, Merck, and 3M were all kind of daily pinches there, the daily squeeze. Squeezed on a daily chart, ready for a large intraday pop. That is exactly the candidates that I want for swing trading one day at a time. This is a rich source of good ideas. In the MACD histograms, winter and fall are still dominating, so the targets are bruised and are ready to fail. And yet there was a pretty good array of things that did well on the 2-day and 10-day NDXs. And that recent strength we saw in Japan, that looks like a bunch of profit taken right there. And Brazil, which we highlighted yesterday, had a good day today too, with the 122. And Treasury still rocking the mic with a volatility market right now. This is perfect season for Coyote, the master opportunist. Swing trading one day at a time in that little omnivore. One of the few animals in the wild that is expanding their range and getting much more prolific. They thrive during chaos, the coyote. That's what returning to the long-term trend is. Still abnormal conditions. It's outside the yellow. This shows signs of bottoming with respect to the 200-day moving average. And the slope of the 30 is still in an abnormal condition. So that's why swing trading one day at a time is especially indicated right now. Okay? But showing signs of establishing a base. Still a nice move available to the top of the stack. It's not free and clear till it gets above that all-time high, up around 454. And this move down to the previous low is still there waiting. So, perfect state for the short-term trading as it sorts things out. Okay? All right, that's everything we got for today. We'll get this published and posted in the usual way. And thanks for your kind attention.